In a dramatic twist of events, negotiations surrounding the future of TikTok in the United States have become ensnared in the escalating tensions of the US-China trade war. Just as a deal appeared to be on the verge of completion, President Donald Trump's recently announced tariffs on Chinese imports have thrown a wrench into the works, leaving the fate of the popular social media platform hanging in the balance. On April 5, 2025, senior administration officials confirmed that a deal had been reached to transfer TikTok's U.S. operations to a new company with a majority American ownership backed by notable investors such as Oracle and Blackstone. The agreement stipulated that ByteDance, the Chinese parent company of TikTok, would retain a minority stake adhering to the 20% ownership threshold mandated by Congress. The plan was for Trump to sign an executive order to finalize this arrangement, initiating a 120-day period for the completion of the necessary documentation and financing. However, the situation took a sharp turn when Trump announced new tariffs on Chinese goods. Following this, ByteDance representatives informed the White House that the Chinese government would not approve the deal until discussions regarding the tariffs could occur. This unexpected development left the agreement in limbo, effectively making it a casualty of the broader trade conflict between the two nations. In light of these complications, Trump extended the deadline for ByteDance to divest TikTok by an additional 75 days, a move he announced via his social media platform. "My administration has been working very hard on a deal to save TikTok, and we have made tremendous progress," he stated, emphasizing the ongoing negotiations. Yet despite this extension, the uncertainty surrounding the deal remains palpable, particularly as the administration grapples with the implications of its tariff strategies. The underlying tension between the US and China is not new. It is a continuing saga characterized by escalating tariffs and retaliatory measures. Following Trump's announcement of a 34% tariff on all U.S. imports from China, Beijing swiftly retaliated with its own set of tariffs and trade restrictions. This round of tariffs marks a significant escalation reminiscent of the trade war that defined much of Trump's first term and continued under President Joe Biden. The latest developments have led to concerns about the potential for a protracted economic confrontation between the two superpowers. Industry analysts are particularly worried about the impact on U.S. agricultural producers, who will face crippling costs due to the tariffs. The U.S. and China have long been intertwined in a complex web of trade, and the recent actions threaten to further disrupt global supply chains. As Stephen McDonnell, the BBC's China correspondent, noted, the ripple effects could have serious consequences for international trade, potentially pricing American goods out of the lucrative Chinese market. While negotiations over TikTok's future continue, the broader implications of these tariff battles extend beyond the popular app. The relationship between the two nations, already strained, faces new challenges as both sides appear unwilling to compromise. As Trump's tariffs take effect, the hope for a swift resolution dims and the possibility of a more entrenched trade war looms larger. Looking ahead, the future of TikTok and the state of US-China trade relations will likely hinge on the outcomes of ongoing negotiations. As both nations navigate this tumultuous landscape, the stakes could not be higher, not just for the companies involved, but for the global economy at large. The coming weeks will be crucial as parties seek a resolution, and the world watches closely to see if a middle ground can be found amidst the escalating tensions. In a dramatic escalation of the US-China trade conflict, President Donald Trump has implemented a series of sweeping tariffs that have reverberated across global markets, leading to significant declines in stock prices and heightened economic uncertainty. As of April 5, 2025, the U.S. has begun levying a 10% tariff on imports from several countries, including Australia and the UK, while China has retaliated with its own 34% tariffs on U.S. goods. The ramifications of this escalating trade war are profound, suggesting a pronounced shift in the economic landscape and raising concerns about a potential global recession. Market reactions have been swift and severe. Following the announcement of these tariffs, U.S. stock markets experienced their worst week since the 2020 pandemic crash, with the S&P 500 plummeting nearly 9% and wiping out $5 trillion in market value. The Dow Jones Industrial Average and the Nasdaq Composite similarly faced substantial losses, with shares of major companies like Apple and Nvidia feeling the pressure. Investment bank JP Morgan now estimates a 60% chance of a recession by the end of the year, a marked increase from previous assessments. In the face of this turmoil, various stakeholders are grappling with the implications of the new tariffs. For example, Taiwan's President William Lai convened a meeting with tech executives to discuss strategies to mitigate the impact of U.S. tariffs on the semiconductor industry, which is crucial to the global supply chain. Our goal is to stabilize the economic situation and ensure the competitiveness of Taiwan's industry, Lai stated, highlighting the urgency of the situation for countries heavily reliant on manufacturing exports. Meanwhile, Turkey's Vice President Cevdet Yilmaz expressed a belief that the newly imposed baseline tariffs could actually benefit Turkish exporters by positioning them favorably against larger economies facing steeper charges. The new tariffs play to our advantage as we seek access to the American market, Yilmaz noted, pointing to potential opportunities amidst the chaos. However, the domestic reaction to Trump's tariffs has not been without dissent. Nationwide protests, dubbed Hands Off, have been planned, mobilizing over 1,200 demonstrations across the U.S. against both Trump's policies and the influence of billionaire allies like Elon Musk. These rallies, organized by a coalition of civil rights groups, labor unions, and other activists, aim to voice widespread frustration with government austerity measures and aggressive trade policies that threaten jobs and economic stability. In an attempt to clarify the rationale behind these tariffs, Trump's administration has published complex formulas to justify the imposition of tariffs based on trade deficits and other factors. However, economists have criticized this approach as lacking coherence, with former Treasury Secretary Larry Summers likening it to pseudoscience. Such confusion only adds to the uncertainty surrounding U.S. trade policies and their broader economic implications. As this trade war unfolds, experts warn that the long-term consequences could reshape international relations and economic dynamics. The U.S.-China relationship, once characterized by interdependence, is now teetering on the brink of a more adversarial stance, with implications for global trade networks and diplomatic engagements. With both nations poised to impose further tariffs and restrictions, the situation remains fluid. Looking ahead, it appears that the economic landscape will be significantly altered by these developments. The potential for escalating tariffs could provoke further retaliatory actions from affected countries, deepening the rift between the U.S. and its trading partners. As global markets grapple with these changes, the long-term viability of current trade relationships remains uncertain, leaving both businesses and consumers to navigate the turbulent waters of a redefined economic reality. In recent weeks, the geopolitical landscape in the Indo-Pacific has been marked by heightened tensions between the United States and China, particularly concerning Taiwan. Analysts are increasingly asserting that the U.S. military's expanded presence in the region is a strategic deterrent aimed specifically at countering Chinese ambitions. This shift in focus comes amid a backdrop of military exercises and diplomatic maneuvers that signal a renewed commitment from the U.S. to bolster its alliances and enhance regional security. According to experts from the Institute for National Defense and Security Research (INDSR) in Taiwan, the recent military activities undertaken by the U.S. are unmistakably aimed at deterring China. Shuxia Wang, an associate research fellow at the think tank, noted that the operational concepts being developed by the U.S. military, such as the Marine Corps' Expeditionary Advanced Base Operations (EABO), reflect a strategic response to China's military expansion. This approach emphasizes the deployment of naval forces from various land locations within contested maritime areas to assert sea control and ensure fleet sustainability. The increased military presence is not merely a show of force, it is a calculated adjustment intended to address perceived threats from China, particularly regarding potential actions of the People's Liberation Army (PLA) in the Taiwan Strait and the surrounding seas. The U.S. Defense Secretary Pete Hegseth recently underscored the Pentagon's commitment to re-establish deterrence in the Indo-Pacific during his visits to Japan and the Philippines, further emphasizing this strategic pivot. Moreover, the focus on the Indo-Pacific has intensified since the return of Donald Trump to the presidency, with fewer resources allocated to European fronts. Su Tsuyun, director of the INDSR's Defense Strategy Division, articulated concerns over China's ambitions, suggesting that the PLA may seek to be militarily capable of taking Taiwan by force as early as 2027, a claim that has not been officially corroborated by Chinese officials but reflects the anxieties within the U.S. defense community. The situation has been further complicated by China's military drills around Taiwan, which have become increasingly frequent since the visit of former U.S. House Speaker Nancy Pelosi in August 2022. The most recent exercises included a large-scale encirclement of the island, signaling Beijing's readiness to assert its claims over Taiwan. These maneuvers have prompted the U.S. to strategically reposition its naval assets such as the USS Carl Vinson away from the Taiwan Strait during these exercises, a decision that raises questions about American military strategy and response. While the current posturing by both the U.S. and China may appear as a game of brinkmanship, it is underscored by a complex interplay of military capabilities and diplomatic intentions. Taiwanese citizens witnessing this ongoing rivalry remain largely unfazed, perhaps recognizing it as a rivalry without rupture, a tactical display intended for domestic and international audiences alike. However, as tensions continue to simmer, there is a palpable risk that miscalculations on either side could lead to unintended escalations. In a separate but related development, concerns have also emerged regarding Chinese ownership of GNC stores operating on U.S. military bases. Freshman Representative Pat Harrigan has expressed alarm over the potential national security implications, arguing that these stores could facilitate intelligence gathering on U.S. troops. With GNC's ownership by Harbin Pharmaceuticals, a partially state-owned Chinese enterprise, Harrigan's call for the Military Installation Retail Security Act of 2025 underscores the growing scrutiny of foreign entities operating within sensitive military environments. The intersection of military strategy and economic interests has never been more pronounced as both the U.S. and China navigate a landscape fraught with potential conflict and opportunity. As the situation evolves, the global community will be watching closely to see how strategic decisions unfold, particularly regarding Taiwan. With both sides seemingly entrenched in their positions, the prospect of diplomatic engagement may become increasingly critical in preventing a misstep that could lead to open hostilities. The future of the Indo-Pacific hangs in a delicate balance, one that requires careful navigation amid escalating pressures and competing national interests.